Hi there, my name is Cassidy and I'm Head of Growth at Franc. In this Franc Academy lesson, we're going to be talking about the basics of tax. Almost every working adult needs to pay tax at some point in their life, so it helps to know how it works and how it applies to you. There are 5 common taxes that affect us as consumers and investors. Firstly, value-added tax, or VAT, is currently 15% and is applied to almost all goods and services you buy, like clothes and non-essential groceries. It's collected by the seller and paid to SARS, the South African Revenue Service. So for example, if you buy a meal at a restaurant that costs you 100 Rand, then 15 Rand will be VAT the restaurant owes SARS. Obviously, the less you spend, the less VAT you'll pay. Having said that, many people don't know that there are 19 basic food items that are 0 rated, which means you don't pay VAT on them. Secondly, income tax is a proportion of your income that you pay to SARS. Most employers are required to collect pay-as-you-earn, which means the income that you receive in your bank account on a monthly basis is less, or net, the income tax you owe. If you don't earn a traditional salary, like in the case of consultants or freelancers, you would need to pay provisional tax. How much income tax you must pay is determined by your gross annual income, ranging between 18% to 45%. However, if you earn less than 91,250 Rand per year, you don't pay income tax at all. The easiest way to calculate how much income tax you are expected to pay is to use a simple tax calculator like the one from TaxTim. It's important to know that any additional income you earn, like interest from savings and rent, is taxed as part of your general income. For example, if you rent out a room or cottage, the net income after expenses is added to your gross annual income and subject to tax at your marginal income tax rate, the highest rate that applies to your income level. In the same way, interest you earn from investments is subject to income tax and adds to your gross annual income total. You're not taxed on the first 23,800 Rand you earn in interest, but if you receive more than that, the rest is taxed at your marginal income tax rate. The next 3 types of tax are related especially to investments. First up, dividend withholding tax. Dividends are a form of investment income you get if you own shares in a company. It's a portion of annual profits paid out to shareholders. Most, but not all, listed companies pay dividends. If you invest in a unit trust or ETF, like the Satrix Top 40, the fund passes on the dividends it receives to you. Dividends are subject to dividends withholding tax, which means tax is deducted at source and you get the net amount. Unless you're a non-resident or hold your investment through a company, there's not much you can do about dividend withholding tax. 20% of your dividends are siphoned off by SARS. Next up, there's a transfer duty, which is a tax levied on the value of any property you buy. It ranges from 3 to 13% of the purchase price. If the purchase price is less than 1 million Rand, there's no transfer duty levied. You can use a simple transfer duty calculator to estimate the transfer duty you have to pay when you're considering buying your home. And lastly, there's capital gains tax. Some investments, like properties and shares, may give you both income, like rent or dividends, and capital gains. If you can sell an asset for a profit, that's a capital gain, and that profit is taxed. You aren't taxed on the first 40,000 Rand of capital gains each year. So, if you hold an ETF, like Satrix Top 40, and you make a profit of 20,000 Rand when you sell, you will not have to pay capital gains tax. But above the 40,000 Rand threshold, 40% of the capital gain is added to your gross taxable income. Now, let's talk about minimizing your tax. Headlines about people going to jail for tax evasion might make you think you're not allowed to take steps to minimize tax, but this isn't true. There are many entirely legal ways to make tax more efficient. Tax efficiency comes down to one simple thing: maximizing your money's potential before tax deductions to reduce your tax liability. There are 3 common ways you can try to minimize the tax you pay. Firstly, contribute to a retirement annuity or provident fund. You qualify for a tax deduction of up to 27.5% of your taxable income and up to a maximum of 350,000 Rand per year. Secondly, you can get tax efficiency when you're paying your medical aid premium and out-of-pocket expenses. There is a small medical schemes fees tax credit of 347 Rand per month for the primary member, a further 347 Rand for your first dependent, and 234 Rand for each of your additional dependents. You can also deduct your qualifying out-of-pocket medical expenses, like those costs not covered by your medical aid. So make sure you keep all your medical receipts and submit all your medical claims. Thirdly, and lastly, you can contribute to a tax-free savings account. It's important to know that there's an annual contribution limit of 36,000 Rand per tax year, as well as a lifetime limit of 500,000 Rand.